the auto industry is a three-legged stool around volume, the quality of that volume, and the profitability of that volume. So as you think about customers having the demand and then accepting what they're getting at a dealership based on their ability to repay, and I think a lot of that is kind of up to the lenders.
Hey everyone, welcome to another episode of Leadership in the Dealership. I'm Danielle. I'm here alongside Don and Keyshawn, and we're really excited to get into a conversation today to talk a little bit about Fed interest rate cutting. And as we all know, this is something that took place, and immediately we're seeing a big impact that's happening for our dealers. But I'd like to kind of understand better, Keyshawn, like when it comes to these interest cut rates, what are you seeing when the dealers that you're talking to?
Thank you. That's a great question. I don't think it's impacting sales of vehicles at all. I think it's impacting the demand from consumers because they sit at home, they watch CNN, they look on their social media, whatever, they talk to their friends at dinner and they hear about interest rates being cut. But most of the average consumer isn't really aware those rate cuts were already baked in by the banks and the lenders expecting rates to cut. Right. So when the Fed actually came in after several quarters of not really knowing what they were or not going to do and cutting rates, like you didn't see the dramatic rate cuts that you would think. Right. Like across the board, not just on the automobiles, but some of that, again, is because a lot of that was baked in. And then some of it is I guess, not common understanding that cost of funds from banks sometimes come from their deposit and balance sheet. So you think of like the big players that from a deposit standpoint, Bank of America and JP Morgan Chase, you already had super low rates. Your rates weren't going to go down much just because the rates were cut by the Fed. So that's one of the things that's really interesting is it's kind of an artificial increase in demand because customers that may have been on the fence because of a variety of different reasons now believe they can go in and get a much lower rate than they had before. Now, granted, the Fed has dropped the rates, I think, a couple of times now. It's not been anything dramatic, right? We're still in the high sixes for mortgages. You're still in the low sixes for automobiles. So as you think about where the big change will come, we're still probably 18 months away, right? Like I was looking at my mortgage statement the other day as I was thinking about buying another house, and I was like, oh, my interest rate's in the threes. I would be a fool to get rid of this and get a 6% rate,
Is that
right?
your second or third house?
Yeah, my fourth house in Alice Beach.
Yes.
So like, so I think it's just it is really great for the environment. You can see how it has stimulated the markets. You can see how it's stimulated demand. But I think the most financial savvy individuals that are taking loans out understand that that impact is not to be felt quite yet.
Mm, okay. And then, Donna, as you're kind of hearing what Keyshawn's saying, like, do you have any misconceptions when it comes to these rate cuts that are happening?
I don't know about misconceptions. I mean, the first thing I would have thought of is as a normal consumer who's not thinking about finance every single day. If it's not your job and you're just sitting there going, "What does this actually mean to me?" I would think like captives might be throwing more incentives out there, maybe because money's cheaper, but maybe they're not correlated. But in the minds of a consumer, you hear rate cuts. Maybe it's time to get back in the market. And again, perception is everything. So you see it in the media, and you might think, if I go down to the dealership this week, or if I'm thinking about getting back into buying a car right now, maybe this is the time. I know people watch mortgage rates almost weekly, right? Is this the time to get back in there? So probably not the same thing on buying a vehicle side of things, but you might feel like if I walked into a dealer and the Fed cut the rate, I'm gonna get a better deal, even if it's not true per se, week to week to week. I think that's where people's mindset is. So it's kind of gets you back in the game because you see it in the media that rates are falling.
Yeah, and I think it's a really interesting thing or a sales tactic for a dealership to use in some instances, especially on customers that were supposed to be backs but never actually came back. Hey, the rates have lowered 25 basis points or whatever. I think is a great marketing technique to get customers back in the dealership if they hadn't previously. And it's also a way, if I'm a finance manager, I might leverage my banks against one another more aggressively when I go to rehash a deal or I'm looking for a rate concession, right? Because as a finance manager, very similarly, they had the same maybe knowledge as the average consumer thinking about what's happening with lower rates. So they might be a little bit more pushy at the fringes with the banks, expecting to have some more flexibility in the rates. And I think that does obviously turn into success most of the time because all the banks want to win the deal. But I don't think we're saying anything significant. Yes, if I will buy a car today, I'm probably going to have a lower rate than I did this same time last year. But it's probably somewhere between 25 and 30 basis points. We're not talking about me saving 100 basis points. We're not talking about me saving like maybe more than $20 per month on the loan term that I decided to get. So again, it has its advantages for sure. I think one of the big advantages that is felt throughout this is the dealership's ability to navigate that flexibility in that $25 savings, right? Now I could put another $1,000 on this deal. As they say, every $1,000 is about $20 in payment. So the car dealer now has a little bit more flexibility in maybe adding more products to increase their profit margins. Maybe, as you think about just overall gross on the deal on the front as well, right? Whether it's, I don't know, somebody goes to buy a Porsche and they want to retrofit CarPlay on it, right? That's $1,000 ad. Like those type of things are marginal, but I guess they do provide some value to consumers. Again, with the perception that rates have changed, I don't think they've changed that much, but certainly the activity around that perception has increased.
Have you noticed, like, in the dealers that you talk to on a day-to-day basis, you mentioned that they're putting a lot of things on the front end of deals. Have you noticed the consumers pushing back on that at all?
I think customers have gotten much more educated and savvy about products in general, whether that's because of the CFPB or the increased litigation that's happened probably since the pandemic. I think dealers have also gotten more savvy about what they push and what they don't push to customers.
Mm.
So I think the take rate is probably the same from consumers as it always has been, right? You're only as good as this person is trying to sell it to you as a dealership. But I think there's probably less products being, I shouldn't say forced, but being presented to customers that may not bring the value that they once thought.
You mentioned something earlier that's interesting, and I'm getting an explanation from you that when the Fed drops rates, whether it's a small drop or you're anticipating a larger one, that sometimes that is already baked in to the rates that you're getting. But when it comes to affordability for a customer who's sitting there thinking about, I want to get back into the market, how quickly might you see a meaningful change? And you say, hey, it's only $20, but sometimes on the low end, $20 gets you into a car, or $50 or
Yeah.
$100 does. So how long does it take before you actually see changes in price? Or how big of a drop? Do we need to see 3 or 4 drops before you see meaningful changes in financing?
Well, it all depends. I mean, the auto industry is a three-legged stool around like volume, the quality of that volume, and the profitability of that volume. So as you think about, I think your biggest question there is customers having the demand and then accepting what they're getting at a dealership based on their ability to repay. And I think a lot of that decision is kind of up to the lenders. And I say that because of their flexibility in terms, right? Like you've seen, I remember when I first started lending, 60 months was like this crazy. Oh my gosh, you're getting a loan for 60 months. Now today, like 72 is the normal. So you're seeing an increase in 75, you're seeing an increase in 84. And a lot of that is because new car values or new car pricing is higher than it's ever been with all this new technology, et cetera, et cetera. So it's a variety of different levers that the industry will pull that will affect affordability. I believe customers have a certain level of fluidity in what they will pay. I think there's a threshold. I'm not really sure what that threshold is before they get sticker shock, right? As customers continuously show up to dealerships to buy cars. They haven't slowed down. It's not like we're talking about, a be a recession. They're still buying cars, and the cars are as expensive as they've ever been. I think the lenders who want that asset on their books and the dealers that want to sell that car will continue to get very creative in how they do that before you have to worry about customers really being scared of the price. I think in America, like there is no fear of buying too much.
Mm.
Like, I mean, you look at credit card debt, you look at housing debt, you look at automobile payments being like, I don't think anybody, even the subprime applicants, I don't think they go in and saying, oh, I can't afford $80 more. They'll just try to figure it out, so.
$1,000 payments on cars up to 13%. You got to pay for that F-150 somehow. So
Yeah, crazy. Talking about yourself there, Honda.
you know me pulling up in the crew cab. So
Speaking of affordability and everything that's going on, let's talk a little bit about like refinancing and how that kind of impacts things. Have we, with this interest rate cuts, are we going to see a lot more people refinancing their vehicles, their homes?
For sure, those people that are paying like 29% right now at 29.88% on a 72-month loan, they're paying that today. They've been paying it for, let's say, since the last 2 years. It is meaningful for them to drop 50 basis points, to drop 80 basis points. And hopefully their credit has improved in that last year and a half. So when they were whatever tier for the lender before, they got them at 29%, maybe they moved up with their tiers with lenders where they can get a lot lower payments. So refinance is probably a bubble that will be growing for that same conception. I was in the car with my Uber driver. He asked what I did for a living, and I told him. He was, "Oh, I'm thinking about refining my car, but next time the rates go down, that's what I'm going to do." And I was like, "You think that's gonna make a difference?" But like, just his thought process, and he had a Subaru, and I was like, "Dude, you probably are like a 6% rate right now. You're not going to go that much lower." But I think all Subaru people are super prime. But so anyway, name a person who
Blanket
drives a
statement.
Subaru that has ever like had bad credit, and go to any auction across the country and find a Subaru that was repossessed, that was not repossessed because it was a total loss or like a death or something like that. Like, people with Subarus just have great credit. So I don't know. Sorry, that's how I feel about the world. We all have our biases. So
Don, have you ever refinanced before?
uh, I've never refinanced my car, and it leaves me sitting there going, how do you find out about this? Like, how do you even know that that's an option? Refinancing your home? Hell yeah. I took advantage of that and ended up with, somewhere in the twos. And
Mm.
that's like free.
So are you just trying to measure your credit against mine? Because I said I had 3 and you
Pretty
weren't
much.
to call.
Needed to call
This, I just need to understand what you were doing.
this when I'm going for my fifth house, right?
Oh,
So,
yeah, okay.
but
Sure.
but I wouldn't even know how to refinance my car, where to go, or who's going to tell me that rates have dropped and there's a better deal out there. So how to consumers?
You wouldn't know today how to refinance your car?
No. I would definitely
Oh, okay.
working for Upstart.
Okay.
Refund
Got
like
it. Got it.
I'm saying I wouldn't know as a normal consumer, like before I started working here, that refinancing was even an option.
I think that is very, very true. Having been at Upstart as well as running a refi business for another bank in the past, is like, it's just not something customers think about. Like, it's so fascinating to me as well when customers are, let's say, they're approaching 15 days past due and they're like, "Man, I can't afford this car anymore." Like, if they just went to refinance it, they might be able to get a cheaper payment to stay in the car. But oftentimes they just continue this perpetual "I can't pay it," and then they end up repoing. So I think, to your point, education about auto refinancing is paramount. And those that do it really well from a search engine optimization, direct mailing, they are in for a huge treat in 2025 with just the customer demand to want to apply. Now, there's still some interesting things going on in the used car market, from valuations and maybe LTVs and their term and rate on the prior car. But I do think there will be an opportunity for those that want to put more money into marketing, whatever that looks like, to really attract more refinance in the space. Because, to your point, a lot of people don't know you can do it. And it's unfortunate because I think it would save a lot of people um, from maybe negative effects to their credit if they knew they could go somewhere. And to your point earlier, that $80, that $50 a month might mean a difference in your ability to repay that car.
It's a big deal. Just curious, refinancing versus I've got negative equity on a trade. Again, seems like education. If you could refinance and save some money, that might be a better option.
Yeah, I mean, I think they're two different customers, though.
Okay.
I think the customer that is going to trade with a lot of negative equity would have never refi because they're looking to buy another car. And the customer that wants to refi typically is looking for money savings, so they don't want to go up in payment. So, I mean, again, maybe they are one and the same in some situations, but to your point before, just additional education that I can do this thing is paramount. And when they can do it, it has to be easy because refinancing your car is challenging for a variety of different reasons. We do it really well, but I think we are the exception in the space and the way to automate a lot of the processes with both the DMV and your current lien holder. So, yeah.
Do you think that, with these rate cuts happening, that consumers, instead of going into used vehicles that they thought that they could get, we might start seeing more of a shift for them looking at new vehicles because there's going to be more discounts, more incentives, more things for them as we kind of look into this?
I don't know. I mean, Don, I'd be interested in your opinion since you love leasing so much, but I think a new car buyer is always a new car buyer, and a used car buyer is always a used car buyer. Like,
Ooh, I might debate you on that one.
see, I'm waiting for somebody to say something provocative, but like I think like myself, I will always buy a late model used vehicle. I won't go buy a brand new X whatever type of car it is from a depreciation perspective, all those things. And I don't know if the people that go buy a new car with 3 miles on it ever go buy a late model, right? I don't think the person that goes to buy a 6-year-old car is ever going to go buy a new car. Like, maybe if they have a life event that changes their life significantly, but people graduate up and down through, like, quality of life, but I
Yeah.
think at the fringes, they kinda stay in that same space. I don't think the customer that has bought their last 5 cars that were 8 years old graduates to, like, this new car buyer. I think that's just how life happens, but that is the opinion of me solely, but I won't ever lease a car, but yeah.
Ooh.
Never leased a car?
I've never leased a car. I don't think I
Would
would.
never lease a
I
car?
would. I don't think I would.
Super interesting.
Part of it is just, okay, I don't own this car, and when I wanna turn it in, I have to get permission to turn it in, and
It's
I
the rule. You don't.
lose it.
It's all the rules. You don't like rules.
I'm just making a payment-based decision, but I maybe a hybrid buyer, and I don't mean plug-in hybrids, although I have driven those before as well. Uh, I would actually go leasing when the payment and the vehicle is right, meaning I'm not gonna turn away money, and it's usually 0 down, roll it in, like, understand what the residual is, or, to your point, if I'm gonna buy something, it's gonna be relatively new, 3 years max, and then, I'm looking for that depreciation hit already gone. Um, that's where I would buy them used, so.
What about you, Dan?
Yeah. Okay. Well, I've always been somebody who's leased my entire adult life.
Not that one time on LinkedIn when you talked about you bought that Mercedes, that wasn't a lease, was it?
We'll talk about that. See, I'm gonna get into that.
That's how I met Danielle, now she
It's true.
I leased all but that one time.
Yeah. My introduction to car buying was all based on how kind of my parents did it. And throughout their whole career, or throughout their whole lives that I've been with them, they've leased their vehicles. So when I started getting into the car world, I was leasing vehicles. It wasn't until my life circumstances changed.
See?
I met my husband who had never leased before. He was like, we could get a used car a couple years old, really nice, do this, that. So it was life circumstances kind of changed things. And yes, I did buy a Mercedes on a platform called Carvana, and it was a great experience.
Another plug.
Uh,
Ernie's gonna love that. I don't know if he's gonna watch it, but hey.
So I think it just depends on the consumer, and it depends on what happens with them throughout their life. And they could change, but to your point, people may stay with what they always do, but then something could shift, and then it could be completely different. Because I never thought I'd be somebody who would buy a 4 or 5-year-old car, and that's now become who I am. I don't have a car payment, so now I see like why people like that so much.
Yep.
But before, it was like, oh, I'm getting a lot of car for my money, but I'm paying a lot every month. So it just kind of shifted for me. Isn't that interesting?
It is a life event will change.
Life
you know?
event.
You fall in love, and they start telling you, like, try this new thing.
Learn how to buy a car from your parents. It means auto's gonna lease, and then, yeah. Carter's gonna be looking at his dad going, "Dad just told me I have to buy a used car."
And you can do whatever you want with your own money, son. My first car was
Yeah.
a 1986 Chevy Celebrity that was $600. My mom allowed me to buy, and they used to smoke every time it stopped. So, like, we all have our different, like, my second car was a 99 Honda Accord that I bought from some used car dealership in Richmond, Virginia. So, as I got older, I had a life event that
Yes.
and I said I can afford
Oh,
a nicer vehicle. Hey, don't tell people what kind of car I drive. See?
okay, sorry.
Now, I don't want to flex like Dom. I drive a nice, humble car.
A nice humble
Yeah.
car. Okay. Okay.
Mm.
Well, before we kind of wrap things up, Don, what was your first car?
First car, gosh, it was
A DeLorean.
yeah, no, it's like it should have been right. 87 Sentra, and my dad wanted to get me a 1966 uh, Mustang fastback in green, and my mom kiboshed the idea, much to my chagrin. But I ended up with a new car not too long after that because
Train them young.
that Sentra ended up upside down in a ditch. So yeah, I tried to drive it like a sports car. So maybe my parents learned a lesson, and my next car was yeah, it's a little sports car.
What's your dream lease?
Dude, dream lease. Probably cars that haven't been made yet. Man, I don't know. Probably walking into something like a Panamera.
Well, way to
Classy.
flip 'em on there, but yeah.
You know,
Yeah. Same badge, different car. My dream lease would be a lime green Porsche 911 GT3 with black race stripes.
Oof.
Yeah. That would be my
I mean, I have to figure out how to talk my wife into allowing it in the driveway. So I'm
Oh,
not gonna.
okay.
nah. It can be parked at the neighbor's house. My wife never has to know her. That's a nice new Porsche. Yeah, it is. It's money.
Well, with that, guys, we're going to wrap this up. These interest rates, they're decreasing. So